Welcome back to the channel, guys. In this video, let's do an update of Bitcoin and the low that is potentially forming on a short-term time frame and what this looks like going forward. What is the worst case scenario, some of the best case scenarios, and of course, update our Bitcoin buying strategy using the Fear and Greed Index, which many beginners are beginning to use. So this is a great strategy to use if you're new to the market, because it helps you enter the market when it is the most fearful, when most people are attempting to leave. So we'll update that and then look at some of the other strategies. Now, if you're an experienced trader, maybe you want to add this to your list of different tools to use. Otherwise, let's crack on and look at the market so far. Bitcoin dominance heading up a little bit. Obviously, money is flowing out of those cryptocurrencies, which we have been covering, and money not necessarily flowing into Bitcoin, but it is retreating to something a little safer, being that it is Bitcoin here. So it's not just my opinion, but the market is doing that. We can see it on the chart. So the dominance of Bitcoin is climbing a little here. So the main thing we're looking for is the Fear and Greed Index. So these are the buying opportunities that we've been covering here. 15 or lower on the Fear and Greed Index. So this is the website you can use. Today we're at 13. Yesterday, Extreme Fear was at 11. The day before was also in Extreme Fear. So that gives us another buying opportunity. You like the buying opportunities? Make sure you smash that like button and subscribe. I need to fit that in there with the bell notification icon as well, guys. So the next thing I want to look at is the Bitcoin chart. And on top of that plan, we're using rules here. Again, Wyckoff stuff. Volume, support and resistance, 50% levels, swings, so a swing chart, bar patterns, and of course, the weekly chart. The weekly chart it just removes the noise. That's why it's a good one to use if you're starting out, rather than looking at short-term timeframes, because the short-term stuff can really get you confused. So on the weekly at the moment, we are not looking like we're going to get a bottom just yet, but that's more of a long-term outlook. In terms of the daily, it is possible that we're either getting a low at this point in time, or something that trends just slightly lower than the low. So regardless of if it does that, you might see a bit of a bounce. So if it starts to trend down, then we might get a little bounce, and then we want to come back and test some of these previous levels that were at 40. So in terms of our rules here, I'm going to focus on the volume, support and resistance, a little bit with the patterns, but of course the weekly chart as well. So if I look at the daily, as you can see here, a fair bit of volume came in on the 21st. We did trend down slightly, but now we've seen a couple of days here at the same price. So for the short term, maybe we'll see a little bit of a reversal here, but I think over the long term, we're probably looking at much more downside. That's not to say that we won't get the bounces, as I've said, to come back and test some of these levels and then retreat again through Q1 and Q2. But they're just looking at the short-term stuff. Eventually, we need to have some sort of bounce. And at that point, people are probably going to get extremely excited that the market might be coming back and that we could see some much higher prices. The desperation kicks in at that point. Now, I'm not so sold on this particular daily low, because when I switch it over to the weekly chart, looking at the longer term timeframes here, there's not much to show us that we need to hold up at this level just yet. Sure, we're above the previous support zones, which is a good sign. Market is trending down a little bit as I record this. The volume is not too bad. It's similar to what we saw in December when we had the big down day, but it's nothing extreme in terms of some sort of stopping volume like we look at with the Wyckoff analysis. So we saw that in May, and it's what I was talking about here. You can see May, we had the big dump, and the market did end up trending slightly lower. So you had a 29,600 low, and then the market on the 21st of June for that week was at 28,700. So it barely got to $1,000, about $900 lower. And then we had the higher low and the market took off from there. So if that happens again, sure, you could say, well, there was a lower low. But really, either way, if you're buying at those lows, you're pretty much going to be happy with yourself if the market trends up from that point, which is why we're looking at that Fear and Greed plan. Worst case, we break down from these 28K lows and we start to trend a little lower into this zone between the previous all-time high and those lows. So between the $20,000 and $28,000 level. And of course, if we get down to that $28,000 level and break it, you can bet your bottom dollar that this is going to be the most extreme part of the fear in the market. Probably going to see it all over YouTube and Twitter of bearish accounts just saying the game is over and we're going to 14,000 or these other lows back here at around 10,000. I think if we start to see that, then you can be pretty sure that we're not going to get to those points. It's usually the most extremes never happen. Think about the upside. Remember our extremes, people were looking for $100,000 in 2021, never got there. $250,000 Bitcoin, 500. There's a lot of extremes at play, and generally the market doesn't get to those extremes. It plays somewhere around the middle and falls short of people's expectations. So on the daily, there is the argument to be made that we could be seeing a temporary low here, especially with this sort of volume that's come in, and we've seen it in December. And we also got just a low, a temporary low. The market didn't do much from that point, but if you're looking for a low, it is possible that something like that will come in. We take it further back just to look for some more areas where this sort of volume came in. And the volume is really important because this is where people are buying up the market. You got a lot of retail, you got a lot of people or investors selling at that point. And if you get the volume come in with a higher close, which is what the bar pattern is here, you can see you had a higher close here, then you know that there is some smart money coming in to buy the market up. And that's why you got a sideways for this point. Market then broke down because they just didn't see any more demand coming in. And you don't see the demand coming in when the market can't push any higher. So that's what we'll be on the lookout for with this low. If this is the low and we get a bit of a move up, where does the demand come in next? Is it a higher low, or do we start to trend back down as well? So that's the short-term picture. Long-term, weekly, still doesn't look like we're ready for a major low. Of course, I'd be happy to be wrong because that just means Bitcoin is at a higher price. But if we're looking back at our fear and greed plan, then we should be excited for lower prices if we believe Bitcoin will be $100,000, $200,000, $500,000 Bitcoin in the coming years. Because obviously buying it at 20 is better than buying it at 40. Just as I talked about earlier, buying it here at 6,000 compared to 3,000, which is something that I posted here on the tweet. With the fear and greed plan, it's shown over time that the market has been trending up, and buying it at 6 or 3,000, you're not really going to notice later on because you have such a low entry point. Now, of course, 3,000 to 60,000 is 20 times, or 6,000 to 60,000 is 10 times. So the gain isn't going to be anywhere near as nice in a percentage term, but you're still going to be able to get some solid gains out of it. So I've talked about the short-term low. Medium term, we're looking at weekly. Not convinced that this is the low, just based on volume and where this market is starting to hold up in terms of the bar pattern. Still a low close. Looking for volume similar to May. Looking for volume similar to that COVID crash low in March of 2020. And we also had some other big volume at the lows in 2018. So from this point, if we move forward into 2022, because we've been down for so long, I can't see us really moving up into new all-time highs until later 2022 or potentially 2023. In terms of the downside, I don't see us going to any of these sort of prices. I think that's going to be the extreme prices that the bears will say that we have to get to, because it'll be based on something like last time where Bitcoin fell 84%. So Bitcoin fell from its high to its low, which is around 84%. So they're going to be looking for 84%, which comes out dead on $11,000. So I don't think it's going to happen the same, and it'll throw those guys off. The same as it's done with the bullish side, going to 150 in 2021 or 200. So I think it happens to both sides. I see that happening to both sides. So for this year, I think we're going to see some more downside. Hopefully we bounce, that sort of thing. But for me, this just gives me more opportunity to be accumulating at these lower prices, as it did back in May, June, July, before we took off. And now we get the opportunity again. So something like that into 2022, probably second half of 2022 will be where we start to climb out, hopefully earlier. But the longer we're down here, more accumulation. So if that happens, 2023, probably where we'll see those higher prices for Bitcoin at this point in time. Cryptos are going to be another game on their own. There's so many of them out there, and they're all at different stages of their own individual cycles as well. Like, share, subscribe. If you found some value from the content, I'll see you at the next video. Until then, have more fun to get more done.